Welcome to the second section of our series, where we delve into the world of stocks. Stocks have been a cornerstone in the portfolios of many successful investors. They offer the potential for high returns, but it's important to understand the risks involved. The allure of high returns. The primary advantage of stocks is the potential for significant capital appreciation. When you invest in stocks, you're buying a piece of a company's future. If the company performs well, its stock price can soar, leading to substantial returns on your investment. Historically, stocks have outperformed most other investment classes over the long term. Understanding stock risks. However, with high potential returns come high risks. Stock prices are subject to market fluctuations influenced by economic trends, company performance, and global events. This volatility can lead to large gains but also substantial losses. It's crucial for investors to understand that the value of stocks can fluctuate widely, and there's always the risk of losing the initial investment. The role in long-term investment. Despite the risks, stocks are often considered a vital component of a long-term investment strategy. They offer growth potential that can help investors outpace inflation and build wealth over time. For long-term investors, the stock market's short-term volatility is less concerning than its potential for long-term growth. In this section, we explored the enticing world of stocks, highlighting their potential for high returns and the associated risks. Understanding these elements is key to making informed decisions and integrating stocks into your investment portfolio effectively. In the next section, we will shift our focus to mutual funds, examining their advantages, risks, and role in diversification.